Briefly explain what futures trading is for the uninitiated. What is futures trading? And what are futures contracts? Futures contracts are financial agreements that obligate the buyer to purchase and the seller to sell an asset at a predetermined price and at a set date in the future. The assets involved can vary widely, ranging from commodities such as oil, wheat, gold, soybeans, to financial instruments like government bonds, currencies, and so forth. Futures contracts are the crux of a world that pulses with financial speculation. What are these, you ask? Think of them as binding financial agreements, obligating a buyer to purchase and a seller to sell an asset at a fixed price at a fixed date in the future. Ever speculated on how the price of commodities such as oil, wheat, gold, soybeans, hogs, beef may fare in the future, tomorrow? Or perhaps in financial instruments like government bonds or currencies? That's exactly what these contracts are pegged to. So given this large range of assets, what particular commodity or financial instrument catches your eye in the futures market, and why? Futures trading is the practice of buying and selling these futures contracts. Day traders use futures contracts as a way to speculate on future price of an asset involved. If the trader believes that the price of the asset will rise in the future, they might buy a future contract now at the current price with the hope of selling it later at a higher price for a profit. On the other hand, if they believe the price will fall, they might sell a futures contract in anticipation of buying it back at a lower price later on. Let's talk about trading futures. Moving on to futures trading. This is essentially a buy or sell practice of the futures contracts. Have you ever tried to speculate on the future price of an asset? Tell me about your experience. How did it go? Were you profitable? How long were you holding? Did you go long or short? These types of questions help me understand your experience in the markets. Purchasing, buying, or selling these contracts, that is exactly what futures trading is all about. If you, as a trader, has a hunch that the price of an asset will go up or maybe skyrocket, you might want to buy the contract at today's price or right now, anticipating that you can sell it off for a profit after the price goes up a little or substantially. Conversely, if you foresee a price tumble, you might want to sell a futures contract right now, hoping to buy it back at a reduced price later. Have you entered into a futures contract? Did you go long? Did you go short? How did it go? It is important to note that futures trading involves substantial risk because the futures market can be highly volatile and because futures contracts are typically leveraged, meaning that traders borrow money to make trades, and the cost that you pay to enter a trade is substantially less than the actual price of the assets. Traders can potentially incur significant losses. Therefore, futures traders is usually recommended only for sophisticated investors who fully understand the risks. Have you traded before? Did you fully understand the risks when you entered your position? Do you know any type of risks that could happen for trading futures? Again, let me know. What's your experience here? Remember though, all that glitters is not gold. Futures trading is peppered with risks, and the risks are substantial. The market for futures can be turbulent, creating a high volatility situation. Since futures contracts are generally leveraged, you pay a lot less to enter the position. The ability to make profits is very high, but also the ability to make losses are equally as high. The borrowed money is a double-edged sword. It facilitates your trade, allows profits, but we also have to keep in mind that we can lose money on the trades, and we should always be careful. This means when you enter the market, you should always have a stop loss, which is a maximum you're willing to risk for any particular trade. And again, things like stop losses and how to enter are reasons why the futures market is only recommended for sophisticated investors. Now, if you aren't sophisticated yet, it is my goal to help you to understand all the risks so that you can know how to safely enter the market, take profit as an active speculator, and become a profitable futures trader.